Hi everyone, this is Michael Bengiat with Lifetime Investor, and this is the Stock Picks Weekend Review video for February 11th, 2023. Okay, let's get started. There's our disclaimer. You can check it out. And as usual, we're going to talk about the current market environment, the stocks in our portfolio, and the watch and ready list stocks. We're going to review those. So first off, this week we had a little bit of a downgrade in our recommended exposure just because we're just not getting the feedback that we always are looking for. In other words, are stocks for setting up? Are they breaking out? Are they holding their breakouts and moving higher? And are there more waves of stocks setting up? That's what we want. We want to see just wave after wave of stocks going. The ones that break out, for the most part, they head up higher. They keep going. And we're not getting that. We're getting kind of the opposite. We're getting a wave of stock to set up, a lot of failed breakouts, a lot of volatility around the breakouts area, and just a lot of plunges out of nowhere, which means that there's really no bids. There's just the institutions and the bigger players are just not stepping up. And then out of the blue, you just see these big drops, and then they come back by the end of the close of the day. Dangerous in trading environment. So now that we're seeing this all the time, we dropped our exposure down to 20%. What I want to do right now is just kind of show you, in case you're not really looking at the charts, here in our notes, we have kind of a list of some of the names. So let me go ahead. I'm going to bring up my Thinkorswim, and I'll go through some of them here. So here's one. This one didn't really do that big fall apart, but you can see it broke out, just wasn't able to do anything, and broke down, and not even in earnings. Sometimes you're getting this on earnings, which is somewhat normal, but this just broke down before earnings, so not acting all that well. Let's look at a few more. Let's see. Here's one, Fold. Again, tried to break out here, then set up a little bit better, a little bit tighter trading, and again tried again, and then really had this is a pretty big drop in one day. I think this was a 9% drop. And really just didn't work. Let's see. Here's another one. This is what we've been seeing a lot of. It tried to break out, just couldn't. It floated around here, kind of even tightened up, which looked really good. Broke out, then had a big, not quite an outside day, and then really just broke apart. Just no bids, and then just came all the way back. So we're seeing a lot of this dangerous action. I'll show you a few more. Here's one, Axon, same thing. And this is a bigger stock. This is not like these are little tiny mega micro caps that are just getting beaten up. So this is a bigger name. Even Chevron. Let's see, Chevron CVX, just really on earnings. Before earnings gapped up. We had this on our one of our positions, and we ended up getting out at a break even, and then we got stopped out of the rest of it, just not acting as it should. So that's another one. Let's see. Here's another one that did the same thing. Perdo CO Education. Let's see. Amelix. That one just tried to break out, just fell right off. Vertex. This has been a real strong stock. Again, just keeps trying to get out and just falls apart. This one had on earnings. Look, another one. Look at this giant outside bar. I mean, up to 102, down to 87, and just this shouldn't be happening, and it's happening over and over and over. So, and even when you go into like the XLB, this was one of our positions. Tried to break out and just couldn't do it. Even broke below the 50. It's getting support of the 50-day, but we're seeing this over and over and over. So it's not a great environment. So we don't want to be upping up our exposure when this kind of thing is going on. Okay, let's now go to our, let's see, where's our charts? Okay, what I want to do, let's start off, and we're going to go now to our current portfolio. So we lost Seco Environment. Sorry, let's go to a daily chart. Again, this one, we had a stop right under here, and it just again, one of those days, broke down and came back. And look at the volumes. Now it's got 3 down days of very high volume. This one, the first day was kind of just an inside day, and then we had a close in the low, and then we had this one, but it closed near the high. Too much volatility. This is what we're seeing. Here, this had another one, just same thing. This was back in November, just a big plunge day, came all the way back. I mean, in the end, it's kind of constructive. It just kicked out all the weak holders, especially this one, and kind of was able to just float around here, then finally break higher. But as for trading, they just chop you up and kick you out. So we lost that one, and sorry, what's the other one we lost? Right, give me 1 second. Bausch & Lomb, BLCO is the ticker. And this one too, we were trying to buy it right out of this little area here. It did break out and just couldn't hold. And then we had 1, 2, 3 days down, took out the stop, which was around below this. And then of course closed up a little higher. Now the volume wasn't anything strong on this, but this is that volatility we're getting. It's just not conducive to putting on positions. Okay, let's take a look at the ones we still have. Give me 1 second. I got to go back to my list. Okay, Diamond Offshore is the first one. This one's acting decent, but just really not getting much of a move up. We're up about 3%. You can see it's just kind of trying to go and just hasn't been able to make much room. And this is, again, we've seen this a lot in breakouts. It breaks out of this little base, little area here. The better one was here. You can see here, it tried to break out of this base, but then immediately plunged, would have kicked you out. That's basically a 10% move. That's past any stop we would put in. And then came ripping back. This has been common too. You just have these big sell-offs, and then buyers compiling right back in. Makes it pretty frustrating to trade. So we're in this. We're not near our stop or anything. We're up 3%, but it's just not going anywhere. And at times it keeps kind of coming down, and then by the end close, it seems that buyers come in near the end of the day. So a little on the frustrating side. This is the XLB. That's the spiders for materials, and again, it just tried to break out and just didn't go anywhere. We had a few days of selling, including one of the highest days of selling, the largest volume since the base, which is over here. And then we got support of the 50-day. Just not acting well for an ETF in this market. So we're holding on to that, but we're getting pretty close to our stop. So we'll see if we can hold and go higher. Now the last one is Credo Technology. This one is actually acting pretty good. And we're up 19.42%. So we actually bought it coming out of, let's see, 1560. Yeah, this was actually probably a better spot, but it just kind of blasted off. So we ended up buying it right when it kind of cleared all of this resistance here. We got it in at 1560. So kind of, got past this and then kept going. Good sign. Then we had a really nice day. And it's kind of just wedging itself up here. We're up about, we were in the 20% profit zone. We did take off half our position. I think we were up, I forget exactly, maybe it was up at least 10%, just because at the time, we were still getting a lot of that pop and drop where stocks go up 10% and then that's it. Then they go down percent and you end up getting stopped out. So just to take a little off the table, we took off half our profits. We're up here, and now we've moved our stop up to, let's see, where's our stop? We've moved up to 16. So we don't want to come all the way back down and get kicked out. And then kind of go, oh, we had a 20% gainer, and now we end up with 0. So we took off half at 10, and then the other half we're at 16. And it's acting really well. It's actually just hugging its 10-day. Really strong stock. So this is what we love to see. Sometimes these go a long way, just not even breaking the 10-day. So we're hanging on to this. It's got some good liquidity. It is a small cap, it's just 2.7 billion. But it's acting really, really well. But you never know in this market. That we could just get one of those days where it just opens up and plunges. So we don't want to be too close in case it does that and stops us out at the low. But we're going to hang on to this one. It could be one of the earliest winners. the big winners of the year. Another great sign we're getting is, you can see here, look, we have 1, 2, 3, 4, 5 weeks up in a row. A really great sign on high volume on 3 of them, actually 4 of them. And it's now cleared its old IPO. This IPO'd in about a year ago, and we've now cleared the whole base that this has formed. And so we're in new high, all-time highs. So it's a really great sign. It's got some nice numbers starting to appear on the earnings and sales. You can see here there was minus numbers. Now, when you see these 200%, 138, you have to take them with a grain of salt, because you were coming off of just minus 2 cents now to 2 cents. You know, these are really, really small numbers. But you can just see from the sales, though, we were 13 million and now we're up to 51 million. Good, that's a really big increase for a small company. They're a tech stock dealing with bandwidth solutions for high-speed connectivity. So it's kind of in a good place. All in all, it's really got, and we can see a breakout year coming next year if the estimates are going from 14 cents annual earnings to 41. That's an almost 200% jump. So really, there's a lot going on here. This is one, well, in the end, we might regret that we sold half our position if it keeps going. But, you know, we do it because you never know what the market's going to do. And at that time, we were just getting too many stocks. You lose all your gains. So anyways, we'll see. But, you know, if the stock sets up, we will be looking to add some more shares to our position. Okay, so let's now move to our ready list. Let's go back to the daily. So at least we have one nice winner so far. Hopefully it holds. So the first one is Bell Fuse. This is a real small cap. It's only $500 million market cap. And I find the stock it's a little confounding. It's hard to actually buy. I've tried to buy it in the past and I never can get filled. And the spread's a little wide. You could mark it in, but it's like I didn't want to mark it in, and it's a thin stock. It only trades about 70,000, but so it's hard to get filled. So a little bit on the frustrating side for this one, but it's acting really, really well. Let's take a look. Let's get a monthly chart. Now this has got a kind of a checkered past, really not been able to do much, but so it's been around for a while. But we're starting to get a nice move up, you know, better than anything we've really almost ever seen. Let's go to a weekly. Yeah, as you can see, nice move starting to come up. The RS is 98 out of 99. So it's looking really pretty good. And what we'd also like, you can see last year was a big breakout. You know, just our annual earnings were, you know, $1.50, then, you know, under $1, and then suddenly last year up to $4.26, a massive earning jump. It could be that maybe they bought some other companies, who knows, did some acquisitions. I'd have to do some research on that. But anyways, we have a little bit of a dip this year, but that's normal after such a massive jump. And we're getting really strong earnings and sales coming here, not just 2 cents to 4 cents, you know, 51 cents to $1.48. So really a lot going on that's good with this company. And so we're right at the top of our buy range. And we don't like the fact that it tried to break out here and came all the way back. So again, this volatility is a little concerning. Now, this was on the buy list. You could have already bought this. But at least on the good side, all the spikes, some of you call them skyscrapers. You can see just looking back, since it really broke out over here in July, you can see how many blue skyscrapers there are versus the red ones. It just shows you that money is coming into this, and you know, if there's buying going on, much more, and there's much less selling going on. So these are all good signs. Earnings coming up in 11 days, so you just have to be careful about that. But it's really looking pretty good. I'd love to see this, you know, really just start getting a lot more volume coming in, and that will help with the stock's liquidity there. Okay, the next one is Geo Group. Oops, GEO is, oops, that's not it, sorry. This is actually a REIT that owns correctional and detention facilities. A little, not quite sure, but it doesn't have any yield. Almost all REITs are, the reason they're a REIT is that they're throwing off, you know, dividends, and this one doesn't. So I don't really know why, but we're getting some, really had a kind of a nice little cup here. Then we had this handle that kind of started to tighten up. Didn't quite break out, so we didn't ever get filled. Then came back down to one more test of the 50, then just blasted off. And so we're right at the top of our, let's see, yeah, right at the top of the buy range, which was at, let's see, the buy range was 1194. Yeah, we were just clearing right out of this, not so much the high over here, but looking pretty good. Nice volumes come in. But again, right at the top of the buy range, it may just be too late to buy, but we still have it on the list. So let's go to our ready list. I'm trying to speed things up a little bit. Oh, this is our long-term outperformer ready list. So we're starting to get some names on this. For a long time, if you've been with us for a while, you've seen that our long-term outperformer trading was virtually zero, because almost all the names that have been long-term outperformers for the last decade or so were more tech names and growth names, and they just evaporated in the bear market of last year. And so we're starting to get some things that are coming back. And a lot of these we're sort of looking to buy at the 10-week or the 21-month. So let's take a look. So the first one is Tractor Supply. Now, a lot of these don't have very good RS ratings just because of where we're trying to buy them. Sometimes we're not buying them when they're breaking out to new highs. We're buying them off, say, the 21-month. So you don't get the excuse me, you don't get the high RS in those. Okay, so our buy range is 227.75 to 234. So we were right coming in on this area here. A lot of volatility though, which is why it's on the ready list, but we haven't really bought anything for our portfolio. We're just getting a little bit too much volatility, but these are all buyable. But we just didn't want to pull the trigger yet for us. But for others, you could absolutely do that. Next one is Arthur Gallagher, an insurance company, the property and casualty insurance. This is one that's really been, we're trying to buy this at the 10-week. So let's go back over here. This red line, a little hard to see the chart. We've been kind of just hugging this 10-week for a while. You can actually see we have a little tight area for 3 weeks. Absolutely buyable right there. The market has just kind of been a little iffy for us. This is one we probably maybe we'll end up buying, but it's absolutely buyable right there. And it's kind of, you can see in the 50 days is really the equivalent of the 10-week, even though the numbers can vary a little bit. So we can see we're just getting a lot of support in the 50-day, and it's bounced. We might actually be, let's see, the range is to 198. Yeah, you might actually, we'll see if this continues much longer. We'll probably move it up so we clear all this area here, which would be about 198, which is right now the top of our buy range. So we'll see. We might move that up. These buy ranges and things, they change with time as the stock price develops. Sometimes we say, oh, there's a better spot here, or our criteria changes. But yeah, that's viable there. Another thing, you could buy it here, and if it breaks above this area 208, you would add to your position. Okay, the next one is Marsh McLennan. MMC is the ticker. This one we're also buying at the 10-week, so let's go to the 10-week. Again, it's doing the same thing as the other one. It's an insurance broker too, so they're in the same area, just hugging that 10-week for a while. Now let's go back to the daily. This one's not as clean. You can see it's had more breakouts that just wouldn't hold. So you can see right about here, if I draw a line, let's see if I can draw a line here. Yeah, you can see whenever it's tried to get above 174 or so, this one day tried again, came down, and then all these days just there's a seller lurking up here taking profits. So that's where you be a little careful. Now, if it clears all this out, that would be another space you could probably add to the position. Okay, the next one is Casella Waste, CWST is the ticker. This one we're looking to buy at on the 21-month. Now that is this pink line here, and we've been hugging it for a couple months now, actually 3 months. It's right on it here. And it's really got a nice uptrend going, started in 2014. It's just one of those names that's usually not on people's most people never heard of Casella Waste, so it's not on their radar. A little bit in the daily chart that you can see is a lot of choppiness, and it's kind of just, there's the 200-day, the black line. It's kind of floating between the 200-day and the 50-day. Again, a little more volatility than we'd like, than nice clean buy off of the moving average, but it's buyable. And the last one is ADP, automatic data processing. Now this one we're looking to buy it at the 21-month. Let's go back over here. We're right at it a little bit. Again, you can see it's gotten support every time it's come down to that, except for this coronavirus crash over here. But it's got a nice history of getting support at that 21 months. So that's, again, buyable right there. And again, nice kind of, except for the coronavirus crash, pretty nice continual uptrend in the stock. We are getting a little bit of a drop in the RS. 46 is a little low, but that's okay because it's been kind of consolidating against the rest of the market. Okay, let's now go on to our watch list. And the first one is Water Drop, WDH. Let's go back to the daily. So this one is starting to get a little abnormal. We don't mind these tight trading here, but it looks like it should have gone right there. See how tight it got, and the volume kind of came down a little bit, and then it just didn't go anywhere. Then it shook out the weak hands, which was constructive, and you would think, okay, now it's probably going to go. And it tried to not. Well, it keeps getting right at that 328, 330. Just can't get past that. Tried again. Now we've actually broken down and closed below. So it's not acting correctly any longer. And we'll see. It might just tighten up one more time and then go. But if it drops much more, then especially if it goes below 276, we'll take it off the list. It's just not ready. And we're getting too much volatility. So, which is not what we want to see. In fact, you're starting to see, if I just draw the line, we're starting to get this. A little bit of a megaphone. We want the opposite. We want it to tighten up. So that one's been on there for a while, just not really doing anything. Okay, with this one, Gilead, we just added it on Friday afternoon after the close. So this one, it's the 86.81. So we're looking to, just kind of clear this little consolidation here. RS is kind of nicely pointing back up. We're past earnings, which is good. That's what caused a little jump up. So this is our buy area where we're trying to get this one. Looks pretty good. Next one is Quanta. This one's, if you've been with us for a while, you're going to notice a lot of the same names just appear over and over because they're all leading stocks. Sometimes they worked, sometimes they didn't. This one you can see, pretty choppy trader. Here it looks like it tried to break out and failed. Come back up again, but you can see a lot of choppy trading. We want to see this tighten up and not be so choppy. But you can see here just really pretty clearly it just can't get past this 154 area. So we're trying to buy it, just clearing this consolidation right over here. And we want to see it just tighten up. We don't want to be big drops and things. That means it's not getting ready to be bought. And earnings are in 12 days, so you got to be careful about that one. Next one's PFG, Principal Financial Group. Let's see that one. We're at 93. Yeah, we're trying to clear this area here too, and it's starting to get a little more volatile, but we're still watching it. It looks pretty decent there. And then we have next one's the XLB. We already looked at that. That's on one of our positions, but it dropped back down into the watch list. And that's it. We don't have any long-term outperformer watch list stocks. There was one, but it moved to the ready list. So that's it for this week. We're going to continue to watch it. We're just back in that kind of careful mode. It's not acting as it should. We're just not getting the feedback that tells us that the market deserves more of our capital. In fact, we got stopped out of 2 of our 5 positions, and then another one last week with Chevron. It's not a great sign, and we've only got really one nice winner, and the rest are just either down a little bit or up a little bit. So we're just not getting the feedback yet. So we just be patient until conditions improve or completely break down, and then we're out again. Okay, that's it for this week. Thanks for listening, and we'll be back next week. Okay, thanks a lot.